Good evening and welcome to our presentation for Celsius Holding Inc. We are associates at Balls LLP, and we are here today to present the risk assessment and forward planning that we found on the company. My name is Lauren Surette, and I'm a first-year associate at Balls LLP.
This is Brock Pfeifer, and I'm also a first year's associate at Boeving LLP.
My name is Davis Boeving, and I'm also a first-year associate at Vols LLP.
Hi, I am Abby Rountree, and surprise, also a first-year associate at Balls LLP.
And we worked collaboratively to put together this presentation for you today. This is all based off of open source information that we found on Celsius Holding Inc. And we are doing this presentation just to inform you about the possible risks for material misstatement in their fiscal year 2023 financial statements. We really wanted to make sure that not only are we being able to receive accurate information, but we wanted to ensure that the company is foretelling that to the general public. So on our agenda today, we will go over how we decided to state materiality and what baseline we're going off of that, especially for tolerable misstatement. We actually decided to use total assets rather than any other baseline. So we'll go a little bit more into that decision and why we decided that. Then we will follow along with the litigation risk and what they are currently dealing with as a company and how that could potentially affect the upcoming financial statements. And especially since not only is that disclosed to the public, we want to make sure that's disclosed in the financial statements. We will then move into what we found to be the top 3 highest probability accounts for material misstatement. And we actually attached some of the financial forecasts and why we decided that those accounts had the highest probability. So we'll talk a little bit about what the client had to say and why they have a high probability of this statement and what we found from the general public filings. And then we will conclude with closing remarks and answer any questions you may have.
Okay, so in regards to materiality, Celsius Holdings actually experienced a net loss in 2022 for numerous reasons, including the marketing and operating expenses had a significant increase, and so there's a lot of fluctuating net income from last fiscal year to this fiscal year. So we've decided that pre-tax net income is not an accommodating option. So we've decided to use assets instead. And because Celsius is more of a high risk company, we're going to go with the lower end of the scale. So 0.5% of assets to find materiality and 50% of materiality to find tolerable misstatement. So like I said, Celsius is a high risk company, and that will also require more testing when it comes to the financials. And its scope accounts include revenue, cost of revenue, income tax benefit, cash, receivables, inventory, prepaids, PP&E, non-current deferred costs, intangibles, and goodwill. And as we mentioned before, Celsius has also been through a multitude of lawsuits, and so we'll need to analyze these and the tax effects that come with them, as well as verify GAAP required disclosures.
All right, following that, we've got a couple of litigation issues that arose in 2022 that are going to have some fallout in the 2023 financials. One of those being, of course, tax effects, as we are currently paying taxes in 2023 for what has been accrued in 2022. So we're going to have to go back and look into those returns. We'll definitely have to consult with a tax expert who has some experience with some litigation losses. Our first case was Celsius versus Florida. Celsius lost to Florida due to a breach in contract. It was over an endorsement deal. A couple of years ago, when Celsius wasn't as strong as they are today, they had offered a deal with Florida to endorse their products, and in return, they would pay him contingently based on how his endorsement resulted in an increase in revenue and in their stock prices. what ended up happening is they hid that increase in their revenue and sort of lied to Florida and pretended that some of that increase was due to their own making and not to his. He sued the company. They were found guilty of the breach in contract, and they were found guilty of fraud. This is not something to be taken lightly, as we are examining their financials for financial fraud, and we now know they have a history of deceit. We will have to consider that very thoroughly. In relation to 2023 financials, they have filed for appeal. The appeal has been selected. They expect to win it. We're going to need to look into that appeal, the probability that they will win it, and any estimates they have made to make sure that they aren't making any errors or fraudulent choices in those accounting results. The other lawsuit that Celsius saw in 2022 was a class action lawsuit for misleading ingredients. They lost it in 2022, accrued their liability on the financial statements, and payouts began in February of this year. So we're going to need to look into that accrued liability to make sure last year's balance is appropriately accounted for as the payouts begin this year, as well as to make sure those payouts are also appropriately accounted for. Other concerns around these lawsuits are risk for estimates, tax effects, disclosures, and kind of wanting to lessen those negative effects that these are going to have on their financial statements. Right. And another account that we had noticed has a significant change that could lead to risk of fraud or error, or is in selling, general, and admin expense. We saw a 30% decrease in this account despite their revenue and their gross profit doubling. This could be due to their Celsius growth program and the fact that they're kind of getting a handle on this increased demand they've seen over the last few years. They claim to be improving their operating procedures, so this definitely could be a result of those plans coming into effect, but we will definitely need to check it out for completeness and risk of understatement. We'll also need to look into presentation of this account, as this account was the only one considered as an operating expense, and we're going to want to make sure that that is appropriately displayed on our financial statements.
Another significant account that we have seen would be deferred tax assets. And this would have to do with the net operating losses that we've seen from this company. As you can see, it had almost a 5,563% increase since the previous year. And we believe that this may be due to the increase in NOL carry forwards that have been accrued from the net operating losses. In their MD&As, they have clarified that they use a valuation method that offsets future tax requirements using the NOL carry forwards. So we will consult with their team to see if there's any necessary judgment with their valuation of the NOL carry forward methods, but it can also be increased by the increase in the tax rate that they've also acquired. The other assertions that we would need to look at would probably be the valuation assertions, definitely because we're dealing with a NOL carry forward method that deals with the valuation of whatever future tax requirements will be. We also need to look at the existence and completeness of some of the total assets and total expenses, as we are seeing that the litigations have increased the amount of expenses that have been accrued from the company. So this may affect the total assets and the net income down the road. And related to this, there are tax accounts of tax payables and tax benefit accounts. These are all related as they follow the same equation to balance each other out. So definitely need to check on deferred tax liabilities as well, and any accounts that may be affected by carry forwards or tax.
The final account that we deemed significant to look into was the accrued promotional allowance account. And this is primarily due to the newly founded PepsiCo partnership started on August 1st, 2022. So originally the accrued promotional allowance account was under the accounts payable and accrued expenses, but since this partnership, they actually decided to change it into becoming an individual line item on their financial statements. So what we're really hoping to do is to analyze the reasoning for that change and to make sure that all of their valuations for the promotional allowance are accurately reflected. So based off of the flux analysis from 2022 and now our expectation for 2023, we saw a 175% increase. So the client explanation for that was primarily because they did change it into an individual line item, and it contains all promotional, marketing, and additional distribution service charges. And so we really just want to make sure that while we're doing the 2023 financial statements, that the completeness and valuation assertions are being met. We really just want to make sure that while this is an individual line item, we are accounting for all-encompassing services under this account. So that concludes our presentation on Celsius Holding Inc. and what we found to be the most significant in our risk assessment from public forum open sources. And so if you have any further questions, we'd love to answer them, and have a great evening.